Can the Reliance Nippon Life Blue Chip Savings Insurance Plan offer you financial security and stability in the long run? Let us find out through an in-depth analysis in this video. Hi, welcome to holisticinvestment.in. We help individual investors like you to make the right financial and investment decision to reach your financial goals in a more faster and smarter way. Now, before analyzing this policy, let us first understand what is this policy is about. So, this is a non-linked participating individual savings life insurance plan, and some of the key features of this policy are: you can enjoy the life coverage throughout your policy term, and you can select your preferred premium payment duration, which can be 5, 7 or 10 years. And once the policy matures, you can also receive a lump sum payout that includes the basic sum assured, guaranteed additions and bonuses. And you can flexibly choose your premium payment frequency, like annually, half yearly, quarterly or monthly. And you can also access loan facility to handle unexpected financial needs. And you can also enjoy tax benefits as per the applicable income tax laws. Now let's move on to understanding the benefits available under this policy. So first is the death benefit, which the nominee or the legal heir gets once the policyholder unfortunately passes away during the policy term. So as you can see, the two benefits mentioned on the screen under death benefit. So out of these two, whichever is highest at the date of death of the policyholder, that will be given as death benefit to the policyholder's nominee or legal heir. Now, maturity benefit is something the policyholder will get once the policy matures. So, what they will get is guaranteed sum assured on maturity, and also any accrued or reversionary bonus plus terminal bonus if they had any. So, all these benefits are available under this policy. Now let's move on to understanding the advantages and disadvantages of investing in this plan. So the advantages are: you can access a loan of up to 80% of this policy's surrender value, and you can also boost your coverage with optional riders. And there are flexible premium payment options to select from, and you have guaranteed additions and bonuses to increase your maturity benefit. So these are some of the advantages. Now the disadvantages are: the life coverage provided in this plan is inadequate, and overall returns are also relatively low. And if you look at the policy term and the premium payment options, does not seem to be very flexible. The benefits also fluctuate due to the inclusion of bonus. So these are also some of the drawbacks that you need to carefully consider before deciding to invest in it. Now, as we have a basic understanding of this policy, let us now move on to the analysis part of the video, where to assess the potential returns based on the cash flow in terms of return percentage. We are going to analyze the IRR, that is the internal rate of return of this policy, to make a more informed decision. So let us examine the IRR based on the benefit illustration provided in the policy brochure. So just for example purpose, let us consider that a 35-year-old male opts for this policy with a 15-year policy term and a 7-year premium payment term, contributing an annual premium of 50,000. So the base sum assured is 2.18 lakhs with a death benefit of 5.5 lakhs. So at maturity, he receives base sum assured, guaranteed additions at maturity, and also the accrued reversionary bonus and terminal bonus. So now we are going to calculate the total maturity benefit based on two assumed future investment rate of return, like 4% and 8%, to indicate worst and best case scenario you can get from this policy. These are not guaranteed percentage, and the actual maturity benefit of this policy will depend on the policy's actual performance. This is just to give you a clear idea of how when you have something where there is not guaranteed return, how the policy can give you worst and best case scenario. So based on that, we have calculated the IRR. So at 4% return, the estimated final payout is 4.50 lakhs, resulting in an internal rate of return of 2.11% as per the policy's maturity calculator, which is lower than typical savings account interest rate. With an 8% return, which is the best case scenario, the projected maturity value is 6.30 lakhs, giving you an IRR of 4.99% as per the policy maturity calculator. Still, lower than the interest rate offered by bank fixed deposit. So despite being a long-term investment of 15 years, the returns from this policy may not keep pace with inflation, making it difficult to meet your future financial goals. Moreover, the life cover provided here is also inadequate. So, given the low life coverage and modest return, this plan might not be an ideal choice for long term investors. As this policy is not giving us the desirable outcome we need, now what we are going to do is we are going to conduct a comparative analysis where we are going to compare the returns from this policy to other alternative investment options using an alternative investment approach. Like with instead of investing in an investment come insurance policy like this, we are going to invest in insurance and investment separately. So let us assume that for life cover purpose that we have opted for a pure term life insurance policy with a sum assured of 5.5 lakhs, which cost an annual premium of 5,900 rupees for a 15-year term with a 5-year premium payment period. So this leaves us with 44,100 rupees annually if you compare the premium budget we had with Reliance plan where we were going to pay a premium of 50,000. Here we are only going to pay 5,900. So the balance amount can be invested based on our risk tolerance. So in the previous example, the premium payment term was 7 years, but here it is 5 years. So for the first 5 years, the remaining amount after paying the insurance premium is invested for a more fair comparison, and for the next 2 years, the full premium is allocated towards investment. So if you are a low risk investor, you could consider debt instrument like the Public Provident Fund (PPF), while high risk investor might opt for equity instruments such as Equity Linked Savings Scheme (ELSS), which is also a tax saving tool. So in this comparison, for a more fair comparison with the previous example Reliance, which has a market linked product which is a participating policy, we are going to compare with something which has returns comparable to it. So we have chosen ELSS as the investment option. So here the pre-tax maturity value of the ELSS fund is 12.68 lakhs. So after accounting for capital gains tax, the post-tax maturity value comes to 11.53 lakhs, delivering a post-tax internal rate of return IRR of 10.27%. So the accumulated corpus is significantly higher compared to this policy. The return rate outpaces the inflation, making this a far more effective strategy for wealth accumulation and speeding up your investment journey. Now finally, what is the final verdict on our analysis on the Reliance Nippon Life Blue Chip Savings Insurance Plan? Is it worth investing in the long term or not? As you can see, the plan lacks flexibility in adjusting the premium payment term and policy duration, and also the key features such as death benefit and maturity benefit are not guaranteed as they depend on bonuses. And also a closer look at the return analysis reveals to us that the returns are lower than the inflation rate and the sum assured is insufficient. So overall, both the insurance and investment aspect of this policy are not favorable for investor, and also it has a high agent commission, so you can avoid investing in this policy. Instead, for securing adequate life insurance, you can opt for a pure term life insurance policy where you can get higher coverage even at affordable premium. And also, as an investor, you can build a diversified investment portfolio based on your financial goals, your risk tolerance, and your time horizon to better effectively invest your savings separately rather than combining with insurance and investment.
If you want to read more about this policy, then you can definitely check out the blog post we have posted on our website through the link in the description. And if you want to gain more professional guidance through a professional financial planner, you can choose to book a one-on-one complimentary consultation with one of our professional financial planner through the link in the description. Also, if you want to gain more investment and financial insights through the leading experts in the finance industry, we also conduct regularly free live webinars through which you can register and gain these insights. The link is in the description. Also, if you like this video, definitely hit like and subscribe to our YouTube channel so we can come up with more such financially beneficial content for you. Thank you for watching.